Hey folks, CA Rachana Ranade here and I welcome you all to a very interesting SME IPO video summary of True Colors Ltd. When I tried to understand the business model of the company, even I was fascinated. So I checked whether there are any listed peers or not, and it is very clearly mentioned in their RHP that there are no listed peers. I'm sure you would also be interested to know what does the company do. And for that, let me give you an example. Now assume that you want to set up a factory wherein you can digitally print saris. Okay, what would you need? Number one, you would need that digital printer, big huge machinery, that digital printer in which those saris can be printed. Okay, this company says don't worry, we can sell it to you. Okay, then you will say a printer is there but we need ink in that. Company says, True Colors company says, don't worry, we will supply the ink to you. Okay, number three, to print those saris, first you need something called a sublimation paper. Okay, you'll say like, why paper? We want to print a sari, we don't want to print it on a paper. That's how the process actually happens. First you print the design on the paper. Okay, then a plain sari and that printed paper are kept on a machine which is extremely heated, and because of that heat the design on that paper gets transferred to the sari. Okay, so you'll actually require a sublimation paper if you want to set up that if you want to set up the factory. The company says don't worry, we will supply the paper. Ultimately, if you feel that this is too much, instead of that, it's better that whenever I want a sari, custom made sari, I'll get it printed from someone else. This company says don't worry, we will do it for you. Oh, and that is the reason why the company says that we are like a one-stop solution for the customers in the digital textile printing sector. Okay, but where do they actually manufacture all these things? For that, let's understand, because it's given that they are not only a manufacturer but they are also a trader. So what do they manufacture? What do they trade in? Let's understand. Number one, as I mentioned, machinery and ink supply, right? For machinery, it is very clearly given that the company imports and distributes high quality, wide format digital textile inkjet printers from internationally recognized brands including Konica, Minolta, Hoptech, Itten, Penga, and Skyjet. So basically, they are going to be a trader. They'll import these machinery, they'll sell it. Number one. Number two, as I mentioned, that they also supply specialized imported digital printing inks. They are also going to sell inks. Trading business. These inks which are tailored for compatibility with these machines, ensuring optimal print quality. Now please understand, important point. For them, sale of machinery is one time revenue and ink sale is going to be like a recurring revenue for them. Simple. Second, as I told you, they also require paper, sublimation paper, but sublimation paper is not what they trade. They actually manufacture this in-house. And very important point is that because of the in-house manufacturing, whenever they need this, they'll have a consistent supply, they'll have proper control over quality, and it will reduce dependence on third parties. And last point, they said they also digitally print textiles themselves also. So for domestic fabric printing sales, they also do job work. So like as I said, based on clients demand, they'll do that, or they can also do this in bulk design printing for sarees. That is also done by them. Okay, so I hope basic what does the company do you have understood. As I mentioned, these are like big sublimation papers that I told you. These rolls will be printed. These are these big digital printers. Okay, all these nice pictures. If you want, you can pause and see. By the way, this company was incorporated in 2021 as a private limited company, got converted into a public limited company on 10th March 2025, and needless to say that the registered office is in the textile capital of India, which is Surat, Gujarat. Now let's understand how much revenue is generated from which line of their business. If I'm talking about machinery sale, that's roughly 10% of the revenue. I'm going to round off some figures, okay? You can see the actual figures on screen. Ink sale, roughly 30% of the revenue. Spare parts, very normal. Now, sublimation paper accounts for 28.14% of the revenue. And if you see here, this was not a part of the revenue till 23. It started in 24 and it is still 28% is a good number of the revenue, right? And if I'm talking about actually fabric printing, as I mentioned, either they will print it as per their own designs or they can also do it as a job work. Again, it was almost 0% in 23. If I'm talking about domestic, 11% no export. And if I'm talking about in 2025, domestic sale contributes to 27.96% of their revenue. So even printing is now decent enough chunk of their revenue. But if you want a further dig down in this category, fabric printing sale, how much is job work, how much is their own design printing? For that, they have mentioned fabric sale directly accounts for 51.97%. Job work sale accounts for almost 46%. Other sales is like 1%. So if you see again here in the previous section, it's almost one third. well diversified revenue from their business. Now let's try and understand how much growth potential does this Indian digital printing market have. As per their RHP, it is mentioned that between 23 to 33, this entire market is expected to grow at a substantial CAGR of 13%. But what could be a significant driver for this? It is mentioned that the adoption of dye sublimation digital printing on polyester fabric can be a significant driver for the growth of this industry. And even currently, India has over 1,000 digital fabric printing services in operation. So, all in all, is the CAGR of this industry expected to be good? Yes, at a rate of 13%. Now, what competitive advantage do we have? Very important. We have abundant availability of raw material. We have cotton as a raw material, wool, silk, jute, everything. In fact, there was a statement by Piyush ji. He mentioned that we have mantra of 5F for the entire textile space. Why? He said we have farms. From farms, we can make fiber, from which we can make fabric. We can use it in the fashion industry, and we can use this for foreign export. So 5F mantra is what he said. And we also have good policy support. We have 100% FDI, automatic route. It is allowed in the Indian textile industry. And we also have a good allocation as per the union budget of 23-24 for the Indian textile sector. Now let's understand about the financials of the company. All rupees are in lakhs. So if I were to convert it into crores, something like 8,093 lakhs will be like 80 crores. Okay. So their revenue, total revenue has gone up from 80.93 crores to 234 crores roughly. I'm rounding it off again. And their PAT has gone up from 3.9 crores to 24.69 crores. That's massive jump, isn't it? So if I were to understand how much times has revenue grown in the 2 years from 23 to 25, revenue has also almost gone up 3 times. How? From 80 crores to 234 crores. Now 8 3 is 24, roughly 3x jump in revenue and roughly 6x plus jump, 6.3x jump in PAT. And if I were to calculate that in CAGR, revenue CAGR is at 70.2%, PAT CAGR is at 133.13%. Even two ratios I would want to tell you. ROC is at 35.94%, which was at 21.43% in 2023, and debt to equity ratio, which was at 3.15 in 2023, has come down to 0.86. Is there any chance of reducing this debt further? We are going to understand in the coming sections of the video. And also, are there any risks? Because till now, everything is like amazing. But please understand, if we are talking about any business comes with some risks. So before taking any decision, you have to understand a business from all the angles and then only take an informed decision. Now let's understand few risks. First risk is a risk of concentration. 90.63% of their revenue comes from 3 states. One is Gujarat, one is Maharashtra, and other one is Punjab. So if something adverse happens in these 3 states, it can impact their revenues, right? By the way, all the risk, every entire data that you can see in today's video has been taken only and only from their red herring prospectus. Okay. One more risk is that they are heavily dependent on the import of machinery and the inks. If you remember, I told you they import machinery, they sell it. They import the ink, they sell it. Out of the total purchase, 34.79% of the purchase is imports. So if, let's say, as an example, there is some geopolitical tension between India and China, Japan, it can impact their purchase. And if their purchase is impacted, obviously their sale could also get impacted. So these are few risks that I wanted to point out from the RHP. Now let's talk about few final important points. Are there any pending litigations? Yes, but no major litigations per se. If you want, you can just pause and check, but you can see majority cases, it's just nil, nil, nil. Nothing much to say about this. What are the objects of this IPO? One thing I always love is when there is a big fresh issue. I like it because whenever company receives the money, it's not only promoters who are going to take the exit. Actually, a big chunk of the IPO proceedings are going to go to the company because fresh issue is aggregating to 102.44 crores, and offer for sale is going to aggregate up to 19.1 crores. So is there going to be sale by the promoter or promoter group? Yes, but only to the tune of 19 crores. Major thing is fresh issue of 102.44 crores. Question is, what are they going to do with this money? Out of 102.44 crores, 48.9 crores, up to that money, it is going to be used for their working capital requirements, and up to 41.83 crores, it is going to be used for prepayment or repayment of certain borrowings that the company has availed. If you remember, I told you about the debt to equity ratio. Can that further go down? Yes, because a big chunk again is going to be used for prepayment or repayment of loans. Balance part will be for general corporate purpose. Now IPO opens today, that is on 23rd of September, closes on the 25th of September. Price band is 181 to 191 per share. Lot size is 600 shares. And if you're like, will the amount be on a higher side? Yes. If you are an individual investor, I mean, let's say any person, if that person is intending to invest, minimum amount required will be 2,29,200. Why such a big amount? It's an SME IPO. For main board IPOs, the minimum amount comes to 14,500. 14,000 or 15,000, correct? But for SME IPOs, it will come to more than 2 lakhs. So here, in this case, it is coming to 2,29,200 minimum amount. And you can see for small HNI, minimum, maximum, big HNIs, all these amounts are given on screen. You can check it out. Ultimate point valuation, if you see the price band at an upper end is 191, and the the EPS is at 13.77 for FY 2025. So if I'm talking about pre-IPO, it is coming, the PE ratio is coming to approximately 14. Because there is no listed peer, I can't tell you what is the industry PE. So we just have this number at the pre-IPO. PE ratio is coming to 14. I hope you enjoyed this short IPO summary of this company, and I'm sure you might have learned a lot. Do let me know in the comment section if you are going to apply for this IPO or not. I hope you enjoyed this. If you did, please don't forget to share this video with your friend. Please don't forget to smash the like button. I'll see you in the next one. Till then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.